Hello everybody and welcome to another financial analysis video. In this video we're going to be looking at a company called Helium One. So what does Helium One do? Well, this is from their prospectus. They say that their aim is to explore, develop and ultimately become a producer of high-grade helium for the international market, a critical material essential in modern technologies. They claim that Helium One is the only listed company in the UK that enables investors to participate in the helium market. So that is what they do. Quite an interesting company, quite a new company as well. This was suggested by Craig Wood. So thank you very much, Craig. Here is your video. He states that the price of helium has increased significantly over the past year, and as it's a limited resource, could turn out to be one of the biggest providers of helium on the planet. So quite interesting here. We think about the commodities in the world, and as a result of the pandemic, commodities are starting to increase in price. And so perhaps investing in Helium One is one way of gaining exposure to the increase in this particular commodity, helium. Okay, so once again, remember, this is a fundamental financial analysis. So let's jump straight in and have a look at their financial figures and see how they are performing. So here is the prospectus. So first of all, we notice that these guys are listed in the British Virgin Islands, and therefore it's quite difficult to actually get hold of their annual report and accounts. However, what they do have on their website is a placing and subscription of ordinary shares. So they are newly listed on AIM, and you'll notice here it says by amalgamation by way of a merger with Attis Oil and Gas Limited and admission to trading on AIM. For those of you who aren't familiar, AIM is the alternative investment market here in the UK. It's kind of like a junior stock exchange where smaller companies go and can raise money, and they've raised money by issuing about 21 million ordinary new shares. Now, if you do look at this prospectus, you'll find lots of information about the company, about the kind of, the exploration that they're undertaking. This is clearly a company which are, they're effectively drilling and they are looking for helium. So when we get through the company, you see lots of kind of charts like this, for example, talking about various projects that they've got going on. And if you want to learn more about the company, then please do visit their website and download this document. However, what we're looking at is the financial numbers, and they are available on page 132. So here we are on page 132, and first of all, we noticed that this company is not generating any revenue. So sales are zero and have been zero for the last few years, okay? So they're still in the exploration process. They haven't actually found any helium yet, so they haven't actually taken it, they're not selling it to the market. And don't forget, when they do sell it, they will be what's known as a price taker rather than a price maker, i.e. they will be selling it at the price of helium that prevails at the time in the market. Their administrative expenses have increased. So they were high in 2018, about 3 million. This is the cost of running the company. 1.3 million in 2019, and now up to the middle of 2020, the costs are 2.3 million. This is all in dollars, you'll notice. Okay, so $2.3 million. There's a few other bits and pieces, income and gains, all pretty small. You'll notice that there was a big net loss in 2018. That's where they sold a whole lot of investments, and they had to book a loss on the sale of those investments. So what we're seeing here is that that's water under the bridge, that's gone. And so this is a company which is essentially making a loss of about $2.3 million compared with 1.3 million in the previous year. Okay, so we expect that. This is an early stage exploration company, effectively looking for helium. If we go through to the balance sheet and look at how strong the balance sheet is, so up at the top on the balance sheet, we notice that they have this top number here. Let me just bring up my annotation. Annotation rather. So here, this top number here, this is the non-current assets. So these are the things that we need to run the business, like tables and chairs, plant machinery and equipment, etc., etc. Interestingly enough, they've got no property, plant and equipment, which I'm not sure exactly how they're doing exploration without anything, which is a little bit odd. They've got some other receivables, which is money that they're owed but they're not going to receive for over a year. Okay, that's about 300,000. But by far the biggest number is this intangible asset. And this intangible asset is basically the costs incurred to date of exploration. So in effect, what they're doing is that they're drilling, they're exploring, they're trying to find helium. They're using kind of, geological kind of surveys and all this kind of manner in order to find it, and then sort of they'll do some drilling down to sort of see is it actually there, for example. And that number there is about 8 million. That's how much they've spent so far on trying to find that helium. Now, if they can't find any and it's no longer worthwhile, then effectively that number just evaporates. It becomes worthless overnight. But if they do find something, then what they've got to do is to make sure that they, the cost of the profit they make on extraction covers those costs. So these are effectively a sunk cost, but they're allowed to hold them on the balance sheet. Okay. So that's really the kind of, the size of the balance sheet there. And we see the current assets is a little bit of trade and other receivables, and then some cash. And you'll see the cash is about $212,000. So that's a pretty important number. And if we look at that cash figure over the 3 years, that cash figure has been falling. Okay, so they still got cash in the bank, but the cash has been going down. Again, we'd expect that because they've been exploring. So they're this ongoing exploration. They're using cash, and we could see that through the losses. We'll also notice there's no long-term liabilities, and again, we'd expect that because no bank is going to lend to a company like this. This is very, very risky. If they can't find the helium, effectively the company goes bust. But if they do find the helium, then it's a big success story. So no bank or financial institution is really going to put their neck on the line for that. So there's no assets to secure the loan against, because remember, this 8 million of intangible asset is just the cost of exploration. So as we'd expect, there's no debt, and that's why there's no interest in the income statement. And so what they do have is this trade and other payables of about just under 700,000. Okay, little bit nervous that we suddenly see the trade and other payables, and we can see this as a consistent. If we're comparing the current assets with the current liabilities, there is a consistency where the current assets are less than the current liabilities. Okay, so if you remember, this is the liquidity ratio, and the liquidity ratio is measuring our ability to meet our financial obligations as they fall due, which is another way of saying, can you pay your bills on time? And so if we look at it in 2020, this ratio is actually 0.34, and that 0.34 says for every $1 they owe and have to pay soon. Okay, so for every $1 they owe and they have to pay soon, which is this number down here, they have only 34 cents, which is this number up here, to pay that. Okay, so this is an alarm bell. However, these guys have really been kind of funded through share issues, and we can see that in the share in the equity section. So if we just have a look at the equity down the bottom, here's the equity, and we can see very clearly that they are funded through share. So the share premium, effectively, which is, we don't need to know the difference between share capital and share premium, but basically they've been issuing shares and they've been using those shares in order to fund the business. So not only have they been funding the business, they've also been using it to explore. So in effect, the kind of, I guess the sum total is that these guys have raised $18 million. They've spent, what's that? Nearly 10 million of that dollar, 10 million of those dollars on running the business with no revenue. So it's effectively a cost, and that's in the profit and loss account. And then they've also spent another $8 million on the actual exploration costs, which they are allowed to capitalize. Now, this is just an accounting treatment. So in effect, right now, they spent $18 million looking for helium, and they haven't found any yet. So read the prospectus. Do we buy into the fact that they're about to find it, that they can get it out, they can extract it at a cost which is lower than they can sell it at the market value, and thereby make effectively return on that money to the shareholders and make the money? And that's the story. And that's the story. If you invest in this company, that's the story you've got to buy into. They're not paying any dividends, obviously, because they're not making any profits. So here is the cash flow last of all. So we'll just have a quick look through the cash flow. Quite interesting in the cash flow. If I just bring up my animation again, so annotation. So here's the loss. And then this number here is the cash loss. Now the cash loss looks pretty good. Well, I say pretty good. It looks a lot better than the actual accounting loss. And the main difference is this number here, which is basically staff are being paid in shares. So if you pay your staff in shares, you still have to show that as a cost to the business. You know, you're still paying them a salary, you're paying national insurance and all the other kind of taxes associated with that. However, it doesn't cost you any cash because they're just getting share certificates. However, it means that if you are a shareholder in this business, your share is being diluted. Okay, your share is constantly being diluted because effectively the piece of the pie that you own is getting smaller and smaller and smaller. In fact, we might just go back and have a look at the income statement and see if there are. Yes, so we'll see the income statement shows the loss per share, and interesting enough, it says that this is both basic and diluted earnings. So these are not share options which are being provided to the staff. This is actual physical shares. They are being given shares in the company in lieu of their salary. Now, this is good from a cash flow point of view, and this is also good from an incentivization point of view, but this is not necessarily good from a dilution point of view if you are an existing shareholder. And so what we see with the cash flow statement is that over time, they generated cash in the 2018, but since then they have effectively been burning cash. This is a combination of the cash that they've been spending in terms of actually running the business, the cash used in investing activities, and this cash used in investing activities, this is effectively that exploration and evaluation. So remember, this is just another form of using cash, except it gets capitalized on the balance sheet. But in effect, they've raised 18 million, they've spent 18 million looking for helium, they haven't found any yet. And you can see on this line here that the proceeds from the issue of shares has also been funding this business. So once again, this company, they're issuing shares from investors who are actually digging into their pockets and putting money into the company. And the more money that goes into the company, the more shares that are issued, the more the existing shareholders are being diluted. So there's more shares in issue, and therefore the value of each individual share is going to go down. And we've also got these shares which are being given to the staff. And again, that is also having a dilution effect. So let's go and have a look at the share price of the company and see whether that tells us anything further. And here is the share price. So it's a recent listing. The company has increased in value. So I'm not sure exactly what happened around April 2021. If you know, then please do leave your comments in the comments box. Let us all know what's going on. But the share price has increased significantly. Maybe that means that they've actually one of their exploration sites has found helium, that suddenly we're going to start to see some revenue coming through. But right now, obviously, there's no PE ratio because there are no earnings, and the market cap is $132 million. Well, the balance sheet, the balance sheet of this company is about 8 million. So it's all goodwill, it's all potential for the future. I'm not sure how to value a company like this. It's kind of pie in the sky. It's really difficult to kind of, you can build sophisticated models, but they'll have so many assumptions in there that it's really difficult to kind of come up with anything which is meaningful. So the company's expensive. It's very high risk. Maybe they're gonna become the #1 helium producer. I'm kind of thinking that if this really is the future, then there's a whole lot of oil and gas companies out there who've got a lot of assets who they could probably turn to helium, but maybe I don't know what I'm talking about. Maybe that's you can't just redeploy oil and gas, although this was obviously the merger with an oil and gas company. So there you have it. Helium One, looking a pretty interesting company. Not sure whether it's a really good investment. It's certainly a high risk investment. So once again, please do share your comments and your thoughts in the comments box. If you know a little bit more about the company, don't forget to like, share and subscribe to the channel, and I look forward to seeing you in the next video.